You're continuing in the morning with Michael Crosby for POTUS. Now I would like to devote time to specifically talking about space mining and about the bonus residual system. With the bonus residual system, again, it has to affect positively all investors. Now, it may not seem like this as I talk about some of the particulars, but it does. So, into this, I left off last time talking about how leaders also could participate in getting a bonus if they do a good job. By the way, these bonuses can be rather significant. So, in the design, if we move forward in understanding different types of long-term investment bonus backtoe, if we're looking at loan setups over long extended periods of time for large investments, when you're dealing with the creative backtoe, you can do something where you also have to cover your income deficiencies. This is to say that if you're doing a developer loan, like for housing, in other words, you're borrowing a whole lot of money to develop a whole bunch of houses from the bank. You go in, and I've laid this one out before, and some people would probably see problems with it ethically, except I've changed everything. So on some of the other original items, someone comes in, they put $1 million down, they borrow up to $168 million to do a mass development, of which they are going to end up making in a 3-year period, basically about $120 million in profit. But they only put $1 million on the table. So there's a problem with what we've allowed to be occurring, and then respectively having such a small, minuscule investment, yet it was the wholesale Fed money that they were allowed to work with that allowed them to make $120 million from a $1 million investment over the course of 3 years. So the modification on that is that you have to make additional partners. Okay, so basically with our space mining understanding, we can have fun and say, oh, we're all the way on to our galactic world. Okay, whatever. Basically, when you're looking at different types of long-term investments for technology, you can say, well, how do we proportion the correct proportions in doing this to make it a fair system? So if you're looking, for instance, at the developer understanding, where somebody says, yeah, they just plop $1 million down, they borrow $168 million that's coming from the Fed. That's the people's money. That's you, your neighbor, that's everybody's money. And then you're expecting to make the project happen, everything gets done, and you make $120 million, but you only put $1 million on the table, which could have been borrowed money to begin with. Somebody trusted you with it, may not have been earned free and clear. Anyhow, so an understanding to say, wait a minute, that's a loan discrimination factor, that's wrong. You'd be right, because, the Fed's money is money coming from various items, such as the collective labor of everybody. I've talked about the house building program and that there's a 30% differential. Hopefully you kept up along with understanding that print factor involving that for the hard asset print balance structure. Now, you have project layout structure, which requires money to come through in increments as projects move along. That's kind of standard to many of these large loan projects, where they don't get all the money at once. They have to produce, and there is a schedule that they have to adhere to, so they're going to get money in increments. And hopefully there's no problem with the way they're managing the project, or the bank might be upset and say, hold on, we don't like the way this looks. We're freezing this for a second. we want some more explanations because this doesn't look right. So that could be important, because if it's the project's not pursuing forward right correctly, and the bank is perceiving there's a problem and they don't want to go to the next increment of cash on the handout, they might have to review it, and it might get kicked into where the project is not being managed properly, and the guarantor insurance and supplementary management system has to kick in and take over the project or part of the project for a while to put it back on its feet, so to speak. So keeping some of these little things in mind. If we jump back over here to how do we do a mega technology investment, and to go for mass mineral space mining in space, how do we deal with getting all of the lifting systems working at an affordable cost? How do we have enough availability of lifting systems? How do we have an overall design for a large scale project? So you're talking about a mass scale project. When we're going to talk about such levels of mass scale projects, you have a lot of players that want to get involved. You'll have the United Nations get involved and say, wait a minute, if you're dealing with space, there needs to be a consideration for some kind of percentage collectively for the United Nations and every citizen, blah, 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 blah. Okay, yeah, there's some stuff about that that talks about that. We'll talk about that a little more, because whether or not percentages are fair, where some of that goes, there's a lot of complications into that. So a lot of companies get to sit down at the table to work with this. Again, this is not a small table item. This is a large table item. And to work with these mega table items, you need mass economic modeling software. These are not small projects. These are very intricate projects. You're talking about not just walking into one room that is a master playroom board. You're talking about a building full of huge rooms, huge war rooms, so to speak, where you're looking at different types of project areas and how things are being managed. So to understand this level of, oh my goodness, this is the most largest SimCity I've ever seen in the world, well, you have to sit down and pay attention. So the way a lot of this happens is there's a lot of small things that have to get resolved in understanding percentages, because you have to know where this whole project is going to go on the long term. It's very crucial to understanding this, because you don't want to have a short-term, oh, we're just going to go take the money and that's it, it's done. It is not a pump and dump type of concept. It does not work that way, nor can it ever be allowed to work that way. So there's a lot of complexities in getting these larger models to work correctly. Okay, so if we're working with the different projects, you're talking with setting up a series of software. One of the areas of special cognitions that I came up with basically is mathematical estimates as to how the rest of the model would be working in a form of harmony, so to speak. How one section, one thing affects everything else. So you have a cross relationship. It's like trying to press a bunch of buttons, and every time you press one button, another set of buttons are affected, and they go up and down. There was a unique system in, if you ever saw Stargate, there was an episode where they were dealing with a time machine, and there are other episodes that they have where they have these huge tables, and you're going to press this one thing that goes down, and it may affect other things. So you might press it down, nothing happens to the other things. You press it a little further, and all of a sudden all these other things start getting pushed up in different ways. So there is this mass harmonious factor or non-harmonious factor. It's because you do one thing, you're going to affect a lot of other things. So when you're working with these mass model balancing systems, you get to the point where one of the things I was built, basically it's a form of a mathematical calculator set that works with balancing the estimates of how things are going to be affected in the future in different ways, different platforms, all these other different areas. So in a way, it's a mathematical understanding of future projectionism. It's like seeing through time itself, working with this style of math estimation cogs. It's very, very large. It's one of those, again, it's one of those things that needs to be recovered, that's lost. So we go forward with understanding that if we get through some of these things, I need to get through for people to understand that are boring. They're kind of boring, unless maybe you're somebody like Elon Musk. You might actually find these incredibly fascinating because you have to have your baseline minimum understanding. So if we're building and working with the mass balance understanding, it's almost like working with all the major large language model companies at the same time, because everybody's going to end up working on a version of the same information. Because why? It's their business. It's just the nature of the way things are. It's inescapable. So trying to work with accepting these various factors at a level that, at a certain level, it's just there, it's inescapable. We move forward dealing with what are the mass percentages that you have to consider. What are the different ways that you have to understand residual ownership of any given idea, area, or performer's work, or patent, or copyright, etc. So as you're working with these larger balanced models and consideration and percentages, it's a far more intricate understanding to get these different types of items into the proper balance, because you have to get these into the proportional understandings that will work properly, because you're going to want to be able to work with longer term projections. Because when you're working with a longer term projection as opposed to short term projections, now you're dealing with long term space mineral extraction. Because it's a completely different concept to sit there and say, we're just going to do some quick here and now development projects, production, make products, sell products, so forth, etc., either works or don't. It's not the same thing when you're talking about working with long-term space mining. You have so many more intricate cogs that have to be worked with and balanced with, and you have to have completion bond and guarantourism. You have to have your guarantor insurance and work with these various parameters that are enormous. That you can be able to make the entire project have corrective factors to adjust to keep the entire project healthy and forward moving. And among these are understanding investor stability. In order to keep your investor stability where that effectively needs to be, you have to have a system where you don't want people to get discouraged, so you have to design in booster points. So this means that you're looking at mass loan long-term situations. We're not just talking necessarily a 30-year, we're talking 40-year loans, 50-year loans, even 100-year loan spans, where you're talking about mass project development, and it's not just one company, it's lots of companies. So when you're working on these mass scales, you have to be working with mass backing. So you're talking about different types of mass backing. You're not just talking about a few large companies, corporations, holding funds that are going to be working with this. You're talking about many, 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 many. So working with the incentive program on your balance is that knowing that your project may not be producing a true recovery of hard asset, but your project is tracking forward and all the numbers are good, you have positive tracking, then you have a loan adjustment factor to do a stimulus. And this is designed to come forward as a maturity factor that's a partial reward, even though you're working with your loan management calendaring. But it's a good sign. This is to say that if you had a contractor project at a smaller level, on a scale, and you're looking at somebody put $1 million down, they borrowed 168 million. They have a mass housing project that they're working with. The further you get along the project, where you can continuously say, yes, this project is proceeding forward on schedule. Yes, it is within the parameters of the box, and things are looking positive, and we definitely have the creation of a lot of realized assets. We've got actual hard construction that has occurred. It's a done deal. So now you can work with readjusting the understanding of solidity and realization. So as you have a realization of your solidity manifesting into hard assets, into accomplishments, then you can also say, okay, we're going to release a little bit of this design graduated specialty area to release a little extra funds to have bonus paybacks. In other words, you're going to be able to hand out money on this little construction project as bonuses as things have moved along. It says, yes, these subcontractors have done very well, and we get to bonus them because we promised them bonus and incentives if they continue the project forward, which means we have to have that money available in the schedule to work with when we have these realizations. Even though the total project isn't done, we have to be able to have bonus money to hand out and incentive money to keep projects moving forward. And this has to be able to also work at the investor level to where there is a bonus release factor going back into the back toe to a forward front end for realization. So as we track back to the larger scale mass space mineral extraction projects, you're going to have so many players that are involved that want incentives. You're going to have people that are going to say, yes, we run a retirement program, we are making a major investment, and we have to be able to see results coming back in. So it's as though they are considered as a tiny subcontractor comparative to the large developer model that I talked about earlier. So basically, you get, as the project gets closer to areas that are completed, we've got certain technology that's moved forward significantly. We have assembly lines, for instance, or whatever it is that is decided to be calendared as an indicator of a positive achievement, and we have a physical manifestation at some point, at some percentage level that is expected. So we're looking at our scheduling, our achievements as it's coming in, and when we realize and get to these certain key points, click, we made it to another more point, click, we made it to another point, click, we made it to another point, then we also have to have the incentive money to pass back to the people who initially were part of the investors to make the system work. So as we adjusted this mass loan factoring, we have to have the back toe kick where it kicks in and pays back money. So in other words, it's releasing and saying, okay, we're looking this as a positive realized point, and we're moving forward. So we're releasing bonus. We're releasing incentive, stimulus, bonus, whatever, for those various areas. So some of this has to go back to your investor pool factor to be paid out as a form of residual. So a residual bonus. So now you have people looking at we're talking about a completely different mega financing structure for those who are keeping. I'm sure there's some people who keep pace with this quite well. Other people will be scratching their head. They're going to have a difficult time understanding how this works. So if we move forward, when you're talking about a much larger scale, you have small percentages that would go into the UN. You have different things as it would come along. But some of these things can't necessarily be paid back or paid in or paid out because we don't really have that much closer to the full realization. So, collecting a lot of tiny percentages in certain areas where we're really not into yield yet, it's not a profit territory, then that means that some of these scheduled UN recognition percentages are not entitled to collect yet because we're not at real legitimate realization, as opposed to parties who are actually putting in investment. So you have to be fair about this, So some of these things are not designed to have kick-ins come in just yet. The gold bars have not arrived at planet Earth yet, no, they're not going to get their cut yet. So as this progresses along here, we're talking about different types of incentives and which areas have to have back toe coverage. For instance, collectively, if you're looking at the United States, citizens of the United States say, okay, we're on the American plan, or maybe it's a multi-nation, or both. And you're going to have separate plans, by the way. There's the way I've set it up, there are actually lots of different separate plans because you want diversity and multi-plan systems so that you don't have a complete breakdown and everything collapses. So in the U.S. plan, you have people who have decided to say, okay, we're buying into this. This is not some kind of pump and dump scam. This is, in fact, a forward-moving, creating mass jobs, developing some real estate, developing technological assets. So there's this partnership when you have people collectively say, yeah, we voted for this, we wanted to do this, and you now have people saying, we'll put in a 1 to 5% contribution as a guarantor insurance factor. In other words, we're not actually going to put the money in, but we're willing to put it on the table as a guarantor loan insurance factor. That means you're guaranteeing a small percentage to step in to cover things to force a reschedulization of new loan management restructuring, which then pays back the guarantor investment factor, because there's also a profit factor. What it does is it guarantees that the money's going to be there so that nobody twiddles their fingers, goes, we have to resolve a problem and set up a new schedule to get these operations going. Where's the money coming from? So this kicks in to ensure that there's always going to be money available as part of how this works. But there's a back toe that heals it. In other words, you're guaranteeing it. You're hopefully never going to have to put it in. Now you have to put it in. Darn. Okay, you put it in. You got additional Fed money coming in on the match. Now people are reworking with the solution. You get the solution resolved. You reschedule the loans. The loan factor is rescheduled and adjusted, and then a slice comes back off of the rescheduling loan factor and pays back the guarantor holders. So as we work with these complex balancing mass loan management situations for development projects, we're dealing with having investor understanding of what sizes, who's involved, what sizes are the pool. So collectively, if you look at Social Security as one account, and people say, yeah, we'll bite, we're into the 1 to 5% guarantourism, this effectively justifies a significant cash leveraging yield guarantee, basically. Now you're talking about the ability to literally consider that beyond the shadow of a doubt, you have justified the management and development project money at a level of saying, yeah, we got $1 trillion. Now we have $1 trillion. If you have $1 trillion, you can do something. Everybody in the space industry is going to tell you, you got $1 trillion? Let's sit down and talk. So getting to the point where you can understand where it is I'm coming from and how it's going to work in certain ways, why you have to have the guarantor insurance, why you have to work it this way, why it's like the development project. There's a lot of guys sitting there twiddling their thumbs going, I'm bored, I got that part, get to the bigger. Yeah, so as this is running around, so now we're talking about what is the collective. We got $1 trillion, it's happening. It's a large design factor. How is this going to work? The way this is going to have to work is people are going to have to be making a profit. So this management of mass development loan has a proportionate ownership that collectively goes to the people. There's lots of people. It's connected and guaranteed by people's insurance accounts. This is a lot of stuff. So you have to have an even collective. Once you get past the even collective ownership residual payback system, we can discuss the how these payments get adjusted and what the other governance systems are going to be. And they're large, they're complex. I'm not going to lie to you. It's a lot of mass model working on that. But now, trying to understand what are the other factors on this. We have to have the positive hard stock factor. As a positive hard stock factor, that's actually complex. There's a lot of positive hard stock factors because you have the upfront cash investor. You have the factor where people are sitting down, how do we guarantee an upfront cash factor on a long-term project? A lot of people aren't going to want to play. But I've explained the loan incentive balancing program that is going to equal this out and be able to pay back early based upon partial achievements. So this has to be built into the management pool system. And these are all loans. So as we're changing the bankability, we now have to understand tracking back to the stock. Stock ownership residual, you got a lot of different ways that people are going to say, if we're going to pay to develop certain technology, then that company cannot solely own the patents and copyrights. That means that you have to proportion a percentage understanding that's fair to the people who are doing the mass investment, or the whole project wouldn't even happen to begin with. And this is also part of the profits. This is part of the issuing of the stock, the co-stock, back and forth, so that you have a collective of people in a mass corporate ownership shell, and how this is going to move forward, and how it's going to have a fairness and equalization. Because if you're using the money of the people, mass amounts of people, you can't end up cheating the people. You cannot end up causing mass price raising and impoverish everybody when it's their leverage factor to begin with that is making the entire project happen and be justified. So there's a way that the models have to be adjusted and work on that has quite a bit of complexity on that. Where we get to the meat of the issue, which is where a lot of companies want to hear about it, we have to have a decided operational set of percentages that are acceptable to various companies and corporations. So this is where you have to have the sit down of how much are you willing to give out as ownership, as stock residuals and paybacks based upon long-term project guarantourism. Because of course you're going to end up harvesting out of this. You're going to end up harvesting, part of the money is going to be harvested in partial technology ownership, and real estate, possibly partial real estate ownership. Some people might want to say, okay, we understand you're going to do real estate development to get the project happening, but we want to be guaranteed something somehow. We want to be guaranteed a percentage in case something goes wrong. We don't want to pump and dump and you just head down the road and you did all this stuff, spent all the money, and it works perfect for you, but the rest of us are screwed. So some people are going to want a piece of lock-in lever on some of that real estate that might be developed. And in fact, you can have subsectional development projects that work on a little bit different contracting that can be handled in a little different way. Those are very complex. I can try to explain those more at a later time. It's a lot of work. There's a lot of complexities to those. And it's very lucrative. It's extremely lucrative to work with those. And it's very solid, hard asset base. I just really love everything that ends up coming into a solid, hard asset-based understanding. But when working with long-term development for, let's say, maybe we could talk about a 100-year commitment. I'd love to talk about a 100-year commitment. I think that's the right way to go. But it's hard sell to get a lot of people to sit down at a table and say, what is a 100-year technology mass project development going to be like? But there has to be a commitment. If this is going to happen, it has to get done. I think that's the way to go. But a lot of people are going to say, we don't want to play with anything more than a 30-year. And then we want to be guaranteed our back toes, and how the assets are going to be secured or in guarantourism at some point in time in case it goes south, so to speak. So a lot of stuff that has to be sat down with. A lot of money is needed to sit there and work with these models and build these models and get these models up and running the way they need to work to have this all happen. So some of us realized this many years ago. It was one of the reasons that I was also working on designing and getting certain large mass models going. When people were laughing at me and they thought I was joking when I was saying, look, we need to put $4 to $6 billion a year in 2005. And people didn't understand where I was going. Now, luckily, there's a lot of people now who will understand what's been spinning around in my brain some of the time and how it's important and how we can do something with that and go someplace with that. And so I'm confident that there's a lot more people that are going to be very happy with an understanding that they're not alone. Gee, I get to break one off on everybody. Ha ha. You're in the same type of building that I am now, and you're not alone, you're not crazy, and you're working with big numbers, and there's more of us now. Here's a good note. There's more of us now, and we can make this happen. We can make this work. We can do this, so... And so bringing on board the fairness, jumping back to fairness, bringing how the balance of all of this works into the fairness structure, into the realization of how do we work with a mass project of $1 trillion, the first $1 trillion. And quite frankly, I see a project that's going to end up becoming a $14 trillion factor. So we're talking mass development. So how do we have extra dual technology, dual usability capability in the design structure as we move along? Now that sometimes that's going to increase cost, but if the dual design factor is that the robotics have other types of use in other ways, like for average citizens say, yeah, I wouldn't mind having a robot that does that, even the robot does certain other things in space. That's a good example, except the reality for many types of specialized bots is it's all proprietary industrial related to the particular setup that we're working with, and anybody in industry is going to say, yeah, we know this. This is the way it works, and a lot of people wouldn't understand it. You don't necessarily just have that duality, so to speak. But now we have universal concepts that are going to start changing. We can start working with standardization of different types of robotic stuff at a completely different level. Yes, it's already been happening. Yes, it's been happening for 30, 40 years with many people, and other people don't understand this. The public doesn't understand this. It'd be nice for the public to understand more, but into this, so yeah, there's going to be some how-to videos that are going to come out of this. There's going to be a lot of new material, mass material is going to end up coming out of this. In many ways, projects people will work on, projects that will be done automated, projects where AI systems themselves are going to be constantly monitoring the projects, and part of the report system for doing that is going to be actually producing segments and pieces of documentary. So you're going to have auto-documentary factors involving the structure, the monitoring the structure is just kind of built right into being there at any given point in time as a tracking system. Those have a duality of being reused to where they can be presented as a product. They can be put out as YouTube products and be commercialized to where there's just money coming in residuals from commercials for people that want to watch those. So figuring out these various areas where things balance out and there can be residual backtoes and different stuff, and how we're going to work with this. Is this totally an AI automatic thing? Do we want to do some more enhanced stuff where we're going to bring performers in? Because then we have to deal with their residuals, which, I'm really big on when key point in times would be justified to say, yes, we want to enhance this more, and we want to bring in ringers. We want to bring in more talent. We have to pay them. That's all there is to it. Or how do we just pay them? How do we justify this? Is there stock factors is there stock factors? Because here's where things can get really creative. If part of any given deal is a hard stock, future stock, in other words, you're not just getting cash, you're getting something extra. So you're getting priority and loan leverage building pool loan guarantor contract to build new hard assets for yourself. So that works out from housing and anything upwards. However, we also have the stock factor, issuing a space mining stock and figuring out different types of standardizations of how mass space mining collective stock can work become a big bonus, because now you've got a whole different area of attraction to sit there and say, we have a space mining stock that ultimately in 100 years is going to be worth, boom, mondo, big, huge, massive bucks. But that's for your great-great-grandkids. So on the here and now, it does have what I previously discussed about a residual backtoe collective system that does have part of an earlier payoff. So we do keep a forward-moving portion on the stock understanding. And then also the stock is a negotiable by itself. These stock certificates are negotiables by themselves, and the closer they get to maturity, the more they become worth. So there's a whole different area of monetization that has to be looked at and respected. But the issuance of the stock and working with the stock, having this existence as a stock where it can be part of a third part. So it's like a triad. You're going to have cash lay participants. You're going to have loan guarantourism factors as an incentive extension, and the stock itself. The stock itself is something that we know is going to grow in maturity, and so that's an incentive that can be also used. So we've got that extra carrot that's into this project that we now can use on a mass scale. Now with CryptiWorld, I've already got some stuff kind of sort of designed that I haven't been able to get to roll out yet, where I've already utilized some of that. I mention that because it's just kind of there. But working with a larger scale, if I'm working with the plan and I'm saying, I'm running for president and I'm talking with companies and we need to sit down and realize, how do we work with repairing Social Security and including people in these mass plans while stimulating mass amounts of jobs and having new creative incentives for those people to be collected to? Because we got a lot of gig workers. There's a lot of gig people out there from A to Z that do stuff. We got a lot of programmers that are like, I wouldn't mind catching some cash work and a little bit of get hooked up into that additional super extra extension hard asset loan guarantor construction option, plus this hard stock, this brand new mysterious hard stock for this master mineral plan. That's sounds very, very interesting. So now we've got a new carrot that can be, again, almost no limitations to people who can be attracted onto doing something this way. The keeping the harmony going on a larger scale means that to be able to do this property, there's just no way around not having massive amounts of large language models working with understanding. So we're going to be working with large CAD models. Some of the stuff that I was working on CAD model, large adjustable CAD models for working with stuff, and it was a different type of system. It's something that I need to recover as well. So this having been said, there's probably a lot of confusion. My head, I'm getting a little bit, I need a break for a moment. Slight darkness comes in. Ooh, here comes the fog. No. But I think a lot's been covered right here, and I want to work this out and figure out how I'm going to track this. I want to get these transcripts made and get this into text at this point for a managed system to be able to make it available for people to do hard looks on it. But the introduction level of going into this area is that I know there's a lot of people that are going to understand exactly what I'm talking about. And there's a lot of people that are going to have like lots of questions. Well, wait a minute, you didn't cover this, and what about that, and what about this? The point is that we can do this. We're going someplace, and we're looking at doing things on a scale that is just so much larger. And I think we need to be happy about this. I think we need to be very happy about what we can do and where we can go with this, and getting to the point where we can finally sit down with a lot of people to say, yes, we can do this. We can make this happen, because this is the ultimate stimulus forward moving plan. This is the platform. I want to thank you for your time very much. My name is Michael Crosby. I'm running for POTUS.